Everyone wants to be rich, but if you ask anyone how much they're worth, 99% of them can't tell you that's the thing. Most of us are fully aware that our net worth doesn't remotely come close to billionaires like Oprah Winfrey, Warren Buffett, or Elon Musk. Just because you are not that wealthy doesn't mean it's pointless to know your personal net worth. In fact, it can be a pretty helpful tool that many people fail to utilize. Knowing how much money you have is beneficial because you can keep track of your progress and see improvements over time. But have you ever wondered how yours compares to your peers? We dug up the average net worth numbers from the Federal Reserve Board's Survey of Consumer Finances report to help you find out. Before we start our financial breakdown, there are 3 key points to understand. First, we're using US data. Second, you can't improve what you don't measure. Lastly, adjust our financial scale to match your economy and determine your standing. What is net worth? Net worth is what you own minus what you owe. Using a net worth calculator, you can determine yours by deducting the value of all your liabilities from the value of all your assets. If your home is worth $600,000, your cars are worth $60,000, and other small assets total $20,000. The total would be $680,000. However, this doesn't equal net worth, as debts haven't been considered. If you have a $200,000 mortgage balance, $30,000 in car loans, and $4,000 in credit card debt, that's a total of $234,000 in debt that must be subtracted from the total number, subtracting the debts from the total value of all assets. It would leave a total net worth of $446,000. What is the average American net worth? So how do we determine the average net worth of Americans? The Federal Reserve Board issues the Survey of Consumer Finances every 3 years to share information about family incomes, net worth, and more. According to the most recent report released in October 2023, with data collected mainly in 2022, the average net worth of U.S. households is roughly $1.6 million. Seems high, right? That's because affluent households drive the average up. Looking at the median, or the midpoint value, is a more accurate representation of the everyday person. The overall median net worth of U.S. households is $192,900. That might help you breathe a little easier. For someone who is under 35 and the head of the family, the median household net worth is just $39,000. This could be due to a variety of factors. People in this age group are at the beginning of their careers and haven't started earning a healthy, stable income. They might have student loans, making it hard to raise that net worth number. They probably either just purchased a home or haven't purchased a home yet. And this can have a huge impact on your net worth. According to the Federal Reserve, average net worth of someone younger than 35 years old is $183,500. The median net worth of renters or other non-homeowners is $10,400, while the average mean net worth is $154,900. This discrepancy indicates a significant wealth gap within the group of renters or non-homeowners, possibly due to a few individuals with very high net worths skewing the average. Additionally, many renters or non-homeowners might not have begun investing for retirement due to lingering debts or insufficient income. Even if they have started investing, it can take a long time for their investments to accumulate and generate significant returns. People in the age group of 35 to 44 have a median net worth of $135,600. At this time in their lives, financial progress picks up a little. A career has usually been established and incomes have increased. But new responsibilities also arise with growing families. The purchase of a home has probably aided in this net worth growth, as they are paying their mortgage down and owning an appreciating asset instead of renting or living with family retirement accounts, have hopefully been established and are being added to on a regular basis. But many people haven't begun to think about retirement yet, if they do so at all. The average net worth for the age group of 35 to 44 is $549,600. The 45 to 54 age group sees steady growth to $247,200. While there aren't always as many life changes from the previous age group, some households are beginning to see kids move out, which may or may not aid in the family budget. These aged families are usually in a similarly priced home, as they were previously, aside from the occasional upgrade to accommodate a growing family. Still, many fail to begin planning for their future due to lack of understanding of investments or due to the failure to realize the need to invest. Debts sometimes become larger and more luxuries are common because people feel that they deserve it because they work hard. The average net worth for the age group of 45 to 54 is $975,800. Those age 55 to 64 see a small jump to $364,500, adding to the circumstances of the previous age group. The housing situation probably hasn't changed much. Perhaps some families decide to downsize their home and their kids move out and less space is needed. Income usually plateaus at this point and begins decreasing due to less hours worked and less productivity. The fortunate ones see an improving situation due to growing investments mortgages that are being paid down and the ability to pay cash for other items instead of financing. The average net worth for the age group of 55 to 64 is $1,566,900. Households aged 65 to 74 have a net worth of $409,900, up slightly from the younger bracket, with traditional retirement. Beginning around age 65, net worth is no longer going to grow like it did before. Some people are drawing on their investments, if they have them, and working less if at all. Healthcare needs are on the rise and can make a big impact on the finances of those who are unhealthy with minimal healthcare coverage. Since these families aren't very old, a decreasing net worth at this point could endanger their retirement. The average net worth for the age group of 65 to 74 is $1,794,600. Lastly, the 75 and older age group sees a decrease in median net worth to $335,600. This is the first age group where net worth actually goes down. But it's not always a bad thing. Spending the money you have left can be enjoyable, provided you're unlikely to run out. None of us know how long we're going to live. But why not treat yourself to a vacation once in a while, as long as you're not going to run your retirement dry? Most people this age aren't working, and if they do, chances are their income isn't particularly high. The average net worth for the age group of 75 and older is $1,624,100. Why is net worth important? Net worth is one way to check your financial pulse and spot strengths and weaknesses. For instance, you may find you have more assets than you realized, or that your debt is pulling down your net worth. However, it isn't a perfect picture. Just because someone has a high net worth doesn't mean they have a high standard of living. For example, a person's home may pad their net worth figure, but they can still be cash poor if they don't plan to sell it and have no savings. Curiosity about others' net worth can motivate us to set and pursue financial goals. It can also make us feel unnecessarily inferior. It's important to remember that net worth isn't a fixed number. It can change, positively or negatively, with time. A better way to measure your financial health would be to know your annual passive income and your annual expenses. Growing your investments so that they provide more income is more important than obsessing over the entire value of your household. How to increase your net worth? Still, wanting to boost your number isn't a bad thing. There are many tactics you can use to build net worth. Start with a few basic steps. Choose a debt payoff strategy. Create a plan for shedding burdensome liabilities. We recommend paying down debts with the highest interest rates first, an approach known as the debt avalanche. Another option you may consider is debt consolidation, rolling multiple debts into one payment. Grow your money. Set up automatic savings, take advantage of competitive account interest rates, maximize employer matches and contributions to retirement accounts, and explore other ways to build wealth. Having an investing strategy in place may also help you reach your goals faster. Increase your income. Sometimes it feels like you don't have enough money left over to save and invest. In this case, it can be helpful to look for ways to grow your income. That may include picking up a few side hustles, negotiating your salary, or looking for a higher-paying job. Be patient. The trend for most people is that net worth increases as they get older. It's also essential to be as consistent as you can with your savings, so that compound interest can do its job in helping your invested money grow. Do your best to get on the right track and allow time for your efforts to pay off.